Welcome to 𝐄𝐓𝐇𝐄𝐂. We talk about investing, finance, and professional development. As the recording time of 11:29 a.m. on Eastern Time on July 29th on Friday, Ethereum closed at $1,713, down about close to 1% so far. Respect over crypto market and the equity market on this Friday morning so far, I would say across the board is relatively a mixed bag, right? We obviously had the post FOMC relief rally, as you know, the results of that meeting basically confirms Wall Street expectation. Seems like we're going with the 75 basis point again. But with respect to the technical, next steps, right? We still have to see like how will the 75 basis point repeatedly, what's the efficacy will result from these two rate hikes, right? And across the spectrum, obviously we had that relief rally, so subsequently allowed the market to rebound. Also combined with some positive tech earnings that came out respectively that aligns with the timing, driving crypto, and also with respect to the high growth small cap stocks to also robustly propel up as well. And as of this morning, I would say, the story is kind of not in opposition, but it's definitely a little bit more mitigated. With respect to the VIX, it seems like it's rising again. And with respect to some tech stocks that reported earnings, and these are like not the mainstream type of tech stocks, but still relevant. Like Intel, it seems like they have reported poor earnings. Showing softer demand for PCs and computer chips, and also with respect to their compression on supply chain, driving the stock to slump by 11%. In addition to that, Roku, which is another, it's like a TV application company. They also plunged 25% after missing earnings. And in addition to that, there are additional verbiage from economists talk about the inflationary pressure. How would the story look like going forward? Are we going to be in for a recession? Are we in a recession already? Like, what would the story look like going forward? Um, so it seems like there's like a debate or argument that's cultivating among media front. Seems like collectively, I would say 75% of the articles are talking about that we are not in a recession yet, but we are gonna be heading into one. If obviously the 75 basis point, again repeatedly does not work out, and inflation is still relatively high, that we have to rise the rates to all the way to 1%. That will really seal the coffin, if you may, if that makes any sense, onto really put us into that recessionary mode. And a recession typically durates anywhere from 8 months to even 1.5 years. So we'll see how that goes. Obviously that's not something we ideally would like to see. But you could tell that based on the verbiage that we've heard from the Feds, a lot of Wall Street already reported that a lot of corporate companies are taking the proactive measure by obviously trimming their headcounts, by either pausing their return offers for the interns that were working in the prior summer, or like during the summer. So no, I believe many students that are graduating this year will not have a job, unfortunately. And that's applicable not just for tech, but also for Wall Street, like financial firms as well, which is relatively interesting. Compare that to last summer, which was they were uh, paying people like double bonus just to get the talents to stay within working in like investment banking or sales or trading, and things like that, because people just did not want to work on Wall Street. But it seems like with respect to the downturn on the M&A market front, transactional front, obviously, when you don't need that many, you're not doing as many deals as you were used to. You don't need that many workforce, so that also trim it from there. So all of these kind of percolate kind of a mixed negative type of verbiage. And the reason that I'm saying is a negative foreshadow, because like the key mandates that the Fed has is the job numbers, right? So if we gotta be trimming more, the unemployment rate is going to rise again, right? Which we are already seeing it, and the efficacy with respect to the repeated 75 basis point doesn't work, that's going to be quite worrisome, right? So I would just dive right into the technical. And before I dive into the technical, I just it's been just some disturbing messages I've been receiving so far in the last couple of days. So I just arrived to New York like this morning, so I'm not running on sleep at all. I just took a red eye, and many of you guys know that I was flying for a business trip. But like because I didn't post yesterday or during like a critical time, I guess, people had been like sending me really nasty messages. Like, someone even say like, "What the fuck? Like, why are you not posting? You effing chink." And some people even say like, "Oh, like you gonna like leave when like it's the most critical time? Like, what are you doing?" Um, I'm just I don't really I take it kind of not offensively, but I get it because you're used to the cadence of what I'm doing every single day. But I'm just trying to think like how's that fair to me with the negative message towards me. Like what did I do? Did I do something wrong? Like, I'm just cuz I don't work for you. You're not paying me at all either. So I just don't know. Like I would get it if like you were paying me and you're like my client and I'm like your financial advisor. I'll get that. Like if I was like not on point, but I'm doing this out of my free time. So I just don't know why you would curse at me or call me like these negative names, and specifically call me a chink because I'm Asian, and I get it, but why? I just don't get it. And you like at least like be upfront with your name. Like you send me with this like alias. So it's just very upsetting, to be honest with you. But anyways, so let me just dive right into the technicals. Without wasting more time. Respect to recording time of 11:37 a.m. on the Eastern time. If Ethereum closure $1,719, that about 0.36%. With respect to the current setup, we are obviously trading on a momentum. You could see that ever since that the positive news from some of the Wall Street banks on last Friday, and then subsequently propel up, and then we consolidate from there, and you could see this red candle, which was the negative anticipatory pressure ahead of the FOMC meeting. And then as we got the confirmatory signal that we're going with the 75 basis point combined with some positive tech earnings, you propel up from here. So right now, the setup right now is relatively stretched, right? You could see that clearly we're getting blocked at 67 out of 70 right now. And at the same time, the MACD has been stretched up for quite some time now. So the next level up is going to be somewhere around obviously 1750. So we are 25 below it, and the next level, real level, which will hit a block is 1860. Okay. So again, like I haven't done any prediction. This is not really a prediction, but this is a setup. And the risk setup right now, I think the risk tolerance, for you to be buying at this level can be relatively high, right? But if you ignore this on a daily perspective, looking on a weekly, it is quite bullish. We're about to form a golden cross. So you can see that we have had like basically 4 green candles consecutively. So a bullish reversal is definitely coming, and I think that makes sense. And this is applicable to the monthly as well. That obviously as we transition into August, which we are heading to basically in 2 days now, we should ideally see some sort of a momentum shift, which makes sense. And as we see that, so in the near term, right, because today's a Friday, and also we have to see kind of like how are the news going to be shaking out with respect to inflationary pressure. And obviously the next main one is basically the August CPI report that's coming out in the first week of August. So contingent on the results of that report, we should ideally see some you know, healthy buying pressure ahead of time. But in the meantime, in a short-term perspective, we need to kind of cool down first because daily is quite stretched up. So that's why like never really time the market, because a lot of the things that we're doing right now on driving the surge is quite emotional based, and also it's more of a relief, confirmatory, you know, driven, not specifically because of, you know, we are fully out of this recessionary environment or out of this inflationary environment. Okay. And then with respect to Bitcoin, I would say it's comparable. It's quite extended. You could see that we're clearly getting blocked at 63 out of 70 already. And we crossed up for quite some time. And right now we are midway, basically meeting with the previous substantive level that we've had not too long ago, July 19th. And if you look backward, you could see that we had formed this platform way before, but this is too long ago. So right now we're trying to recuperate, try to form this like higher lows, if you may. But you know, we still need to kind of cool back down before we go up from there on a daily perspective, right? But weekly is quite bullish. You can see that clearly we're about to cross up. Monthly, it's taking some time, but you know, you can see that we have clearly hit some sort of a plateau already. And this is applicable across the, you know, bulk of the altcoin side of the house as well. So yeah, let me know if you have any questions. Yeah, it's definitely not quite disappointing to be hearing those comments, and I obviously, you know, when I see those comments, I immediately ban them and block them, because you know, that's not the way to treat people in general, and calling me names when I've done nothing to you, um out of frustration in a way, it's quite unfair to me, right? So I'll keep that in mind. And thank you again for if you were like participating in this stream again. And let me know if you have any questions. Take care. Bye.